What is going on, family? Live today. Don't back up on the camera because you live. You want to be here. Come on. Oh, your hair not done. Oh wow. But his hair not done. Look at this. Hold on, am I?
Disrespect. No,
Field trip. Yep, since we all quarantined. Thank you. They did a field trip to come visit me here in the office. So we are here. I need to cut the hold on for a second, family. Can't be playing other people's music in the background while I'm live on YouTube. Family trip. Get off my camera, Mark. Get out there. Yeah, bye. See everybody. Man. All right. First question. So first of all, how's everybody doing today? Hoping y'all doing good. Welcome to the first session, AMA, which stands for Ask Me Anything. My family came to visit me here at the office. They were bored at home since we've been quarantined here in Los Angeles. So everybody except my wife decided to come step into the camera. You can at least say hi to the people.
Hello.
Yeah. Kisses to you too. Yes, more. Okay. So now I'm back, fully yours, here to have fun on a Freestyle Friday. Actually, it's Financial Friday. Really just got through clearing up the books, reconciling the bank account, entering invoices, double checking, sending out invoices, collecting finance, making sure it's updated in the bookkeeping system, to which I use Zero to get that done. So here it is. Ask Me Anything Friday on Freestyle Fridays. Let's go ahead and get to it. First question from Michelle Blackwell. Why aren't I a fan of LLCs? It's not that I'm not a fan of LLCs. I love LLCs. What I'm not a fan of when it comes to LLCs is the misconception that you have to have one to start your business. That's what I'm not a fan of. I do believe LLCs are extremely beneficial, but they're beneficial when it makes financial sense to do so. The problem I have is the fact that we are a society that will go ahead and just automatically jump on the first thing that we hear because some seemingly credible source has told us that in order to be successful, you need to have these things. And while that may be true for certain individuals, it's not true for all individuals. And therefore, especially when we look at minority groups, people who don't have all this initial capital available to them, and so they have to bootstrap their business, they don't need to be spending money on unnecessary things, right? They need to keep as much money available to them so they can ensure that they have the finances to grow their business. And when we go out spending money on LLCs, ask yourself, what really does an LLC do for you? For those of us who have LLCs, what has it contributed to your business? If we say, well, it provided protection, have you been sued? 90% of the people will probably say no, because they're trying to do their best not to be sued. And if we're worried about lawsuits, well, think about it. That's what insurance is for. LLC does add that little thin layer of protection, but it's not at all the entire protection. As a matter of fact, there's things that you can do that will cause the judge to even bypass the LLC. So sometimes it doesn't always work. Another reason I'm not a fan of LLCs is because those same individuals that psych you into getting an LLC doesn't really tell you the whole entire truth. You have that LLC, which is one, get your operating agreement. Two, which is to operate truly like it's separate from you, meaning that you have to properly capitalize the LLC, or properly add funds into it, you really have to separate yourself from it. Meaning that, say for instance, if you want to take money or you want to take loan from an LLC, then you literally have to draw up a contract, a loan contract with an amortization schedule and do so. You have to treat it as that. And there's just a lot of things that go into owning an LLC that they do not tell you about, which is why I'm saying, you know what, if you're not ready for everything that comes along with owning an LLC, you don't need it. So again, it's not the fact that I'm not a fan of LLCs. I'm just not a fan of the manipulation that comes along with it. So I encourage everybody, if you don't need it right now, which 90% of the people really don't need it when they're first starting, start without it. And then when it makes financial sense, form the LLC and make it do what it's supposed to do. But don't make that an additional stress when you're first starting your business. So that's pretty much. I hope that answered the questions for you, Miss Blackwell. Not that I'm not a fan of LLCs. I actually love LLCs. Love what you can do with them. Love how you can really diversify your business. Really love how at a certain financial point you can actually start to save money tax wise, forming an LLC. So again, not that I'm not a fan. I just want us to really be mindful of everything when it comes to that. So great question. Appreciate you asking. For those of you who are just joining, welcome to the first session of the AMA, the Ask Me Anything live. Just trying to do something to help us through this COVID-19. A lot of people are being shut down. A lot of people, especially for small businesses, are having to close our doors because they're considered non-essential. So I mean, it's just a lot of things going on here, man. So your favorite Uncle Cousin just on here trying to answer as many questions as I can. Probably add some comedy relief because I know y'all gonna clown and talk about me about something. But hey, I'm good as long as I can make you laugh and make you have fun. We good to go. So let me see. Uh, Unique View. Hello to you. So the question is: it okay to sell T-shirts online without a business license? Well, that one is kind of, I'm gonna say it all depends because you can sell online from your home, right? Um, and think about, well, first let me back up. Let's explore what a business license is. Business licenses is normally a permission slip from the state, county, jurisdiction, city that you live in, right? For all of you can see, like that little piece of paper at the bottom, that's my business license from the city of Cerritos, where I'm operating here in my office. Now, I was in this office beginning January 6, 2020. I just got the business license probably March 1st, 2020. So between January and March, I was operating without the business license. And I probably could have done it, the whole year or so. But there is if I'm operating in the city, I have to, one, let them know that I'm operating in the city. Two, I have to make sure that I'm zoned or I'm in a zone for the type of business that I'm doing. So, and then business licenses also just let the city know what type of businesses are operating in their city. So I'm sure for statistics, for economic purposes, they want to know. But a business license is more or less a permission slip from the local city, right? It's not a state level type thing. It's not anything like that. But here's the thing: not all states, not all cities, not all jurisdictions requires that you have one. So when it comes to obtaining a business license, I would check starting with your local city first, or your local's jurisdiction, to see if they require one. And if they don't, then by all means, you're cleared to go. Um, but for the most part, if a city does require a business license, I highly recommend that you get the business license. And the business license, I'll be honest with you, is like just like an LLC. It really doesn't do anything for your business. It doesn't save you money. It doesn't add value to your business. It doesn't do anything. It's just one of those requirements that has to happen when you own a business. It's just simple as that. So check with your local city. Make sure that you don't need one, and if you do need one, get it right. I mean, you can write it off on your taxes because it is a requirement. If your city can't even talk right now. If your city requires you to have one, write it off on your taxes as part of your business expenses. That's about the only thing we can do with a business license. So yes, let's see here. Next question. We got a lot of them coming in, man. Appreciate y'all joining again. Let's see. Uh, Mr. Max says, I haven't filed a return for a few years. Any advice? Really? At this point, the only thing, if you haven't filed taxes for a few years, just file, especially now. You know, there's so many things happening with this COVID-19, with the IRS, uh, all these proposals going out. You know, changes are happening daily right now. File your taxes. Why you want to file all back taxes? Because if any, like for example, they're talking about these stimulus packages that they're wanting to go out. Been hearing a lot of talk about that. Not sure how it's going to happen, when it's going to happen, or even if it's going to happen. But let's just say, for example, it does happen. Stimulus package goes out, but for especially if it's coming from the IRS, most of the time they only issue these stimulus packages to individuals who are current on their tax returns. That means that all years from uh, the past 7 years up until most recent, which is 2019, has been filed. Well, I'm gonna say 2018 because they've given, just in case I'm not sure if you guys know or not, but they've given us an extension up until July 15th, 2020, to both file and pay our taxes. Um, I put a like I think it was a couple of days ago. I put something out there that says, you know, this extension to pay was really only for those who think they're going to have a balance due. That balance due, instead of having it paid on April 15th, can now be paid on July 15th. Well, now the same goes for actually filing your taxes. Instead of having an April 15th deadline, we now have a July 15th deadline. But I'm encouraging everybody to still get those taxes done as quickly as possible because, like I said, things are changing daily. We don't know what's going to happen. These times are uncertain. It's very unprecedented. And I promise you, like I had just tried to do a video yesterday explaining about the April 15th deadline and woke up this morning and here's an announcement saying that that's been pushed back to July 15th. So I just scrapped the whole video like, well, there goes that. So things are changing daily. So if you haven't filed, I'm just encouraging you to go ahead, get it done. Do keep in mind that if you haven't filed because you think that you have a balance due or something like that, you can make payment arrangements. You don't have to pay everything all up front. But to be on the safe side, you want to make sure that you are at least current, meaning you filed everything through tax year 2018. So get those in as soon as possible. If there's some more reasons why, Mr. Mac, that you haven't filed and you need to shoot me an email offline, please do so, and we can have that conversation privately, and we can go from there. So, yeah, let's see who else here. Chris says, what info do I need to file taxes for cryptocurrency trading? Okay. I have under 10 trades now. Just hold, but did I make a few bucks from short-term trades? Do I have to report such a small gain? Yes. Bitcoin. Actually, I got my commemorative Bitcoin right here. I love it. I know this is just, but we all know this isn't real, right? Bitcoin is a digital currency, but I still like the fact that there was something tangible that I can touch on to when it comes to Bitcoin. So as we know, Chris, I'm not sure when you did the trade, was that in 2019 or in prior years, but the IRS is now, man, I wish I can like share my screen with y'all, but that's not possible when I'm just doing it live through the webcam. But on the actual tax return, there is a checkbox that we have to check to say, did you make any cryptocurrency trades? And the answer to that question determines whether we have to actually file. Now, even though you said you have small gains, less than 10 trades, they still want to know. And cryptocurrency at this point is treated just like any other capital gain. So it's going to have to be put on the form 8949 and carried over to Schedule D. The only thing is with the cryptocurrency, because how it's accumulated, you want to, especially on your end, keep track of how you accumulated it, because that is added to what was called your basis, right? And then when you sell it, you compare your basis, right? Let's say, for example, you did $100 basis, but you sold it for $300. Well, the difference between the two is what you're taxed on. If you purchased it for $100 or you accumulated it $100 worth of cryptocurrency, sold it for $300, well, then you'll have a $200 gain, and that's what you'll pay tax on. The thing about it is, because it's a capital gain, it qualifies for capital gains tax, which is taxed at a lower rate, right? Which is the whole reason why we love capital gains, because it's taxed at a lower rate, and depending on your tax bracket. So yes, unfortunately, still small transactions, because it was a transaction, my man, it still has to be recorded. The two forms you want to use is the 8949 and the Schedule D. And again, you just want to make sure you keep track of uh, the trades, or how much you spend, or how much you gained from the sale versus how much you paid or accumulated for the Bitcoin. Hope that answers that. Yes. Oh man, we are getting it in with some questions today. Let's see here. Um, Lola said, has there been a push in the date for filing? Yes, I think I answered that question. Yes, now the date is actually July 15, 2020. That is our deadline to get it filed. Okay. Let's see. Another one for Miss Blackwell says, what is a sales tax permit and when do you need to get one? Great question. And I actually got a video about that. Well, it's a video. You guys can check it out. It's about online sales tax. Well, sales tax for online retailers. I do believe that's the title of it, but it's out there for sales tax. But a sales tax certificate, depending on what state you are, they call it different things. It pretty much allows you to buy things at wholesale prices without paying tax on them when you purchase it. So like here in California, we would go down to the CDTFA, which is the California Department of Fee and Tax Agency, right? And we would apply for a seller's permit. They would give us this permit absolutely free, no cost to us. At least financially, it's going to cost us administratively, because there's a lot of paperwork and things we got to do on the back end. But we take that certificate and we can go to these wholesalers, right? Like say, for example, if I had a t-shirt business, I can take that seller's permit, go down to a t-shirt wholesaler and buy a bunch of t-shirts for a discounted price and not pay tax on it. So because I didn't pay tax on it, now when I go resell those t-shirts to the public or to my consumers, I must charge the consumers tax, okay? And that tax doesn't go to my profit. I don't keep that tax. The tax that I charge the consumer, I separate that and then I give it to the actual agency, which is the CDTFA here in California. So that's how sales certificates work. It allows you not to pay tax when you purchase it, but you must charge sales tax to the consumer when they buy it. You take their sales tax, you send it directly to whatever state agency is collecting it. Okay. And then it's tricky depending on how you do it in your taxes, or depending on how you keep your books. One thing you would do is if you include the taxes in your gross income, then the taxes you paid out, you would write off as an expense. However, if you do your books and you only track, or you only keep track of the amount that you collected and not the amount that you sent out, then you would not include that in your expense report. So it really depends on how you keep your books, because you can't be double dipping, right? So that is the purpose of the resale certificate. And keep in mind that if you have a resale certificate and you're selling online, I highly encourage you to check out that video, because as of January 1st, 2020, we also have those new sales economic rules, or these nexus rules is what they call. which means that if you are selling to a different state more than a certain amount, you might also have to pay sales tax to that state. So keep that in mind as well. Hope that answered that question here. Um, let's see here. Ms. Yenko says, I know someone that moved for a new job in 2018. All right. They incurred a lot of costs. Is it true that the Trump tax laws prevent these costs from being recovered by non-military persons? Yes, that is true. The Tax Cuts and Job Act actually removed the moving expenses, right? Hopefully they was able to get that reimbursed from their employer. I know a lot of employers, if it was for the employer's convenience, a lot of employers will reimburse moving expenses. But unfortunately, moving expenses, at least from a federal perspective, got cut out. That got removed. In the state of California, if you moved into California, California still allows you to deduct it on your state tax return, but it is gone from the federal. So hopefully that person, whatever state that they moved into, they were able to keep those receipts and tell them to check and see if the state offers that credit because if they do, take advantage of it. You know, a lot of us, we tend to forget that the states still do give out refunds and credits and things like that, which can help benefit, especially if the federal isn't giving them much nowadays. It's still good to get something from the state. So check that out and we'll go from there. Let's see here. Miss Katrina Murray said, I am an LLC and files as an S Corp. Okay. Do I need to pay myself or should I wait until the end of the year to see profit? Whoo! That's a good one, Miss Murray. Excellent question. Love the question because it brings some reality points, right? Kind of when I was going back to Mrs. Blackwell question about why me and LLCs, I don't, not the fact that I don't like them, it's just one of the things that come into it. So let me get some water. I'm talking on my throat and went dry. Lips and wet chapped a little bit. All right. I had to drink some water for that question. Let's go. So LLCs taxed as an S corp. By law, the IRS says that if you have an S corp, even if you are a single member LLC being taxed as an S corp, you are required to pay yourself a reasonable wage. Okay. Now, of course, there are exceptions. One of the things you said, Ms. Murray, is to wait until you see profit. The IRS doesn't really want you to wait till the end of the year if you see a profit. If you're seeing profit throughout the year, like if the S corp or the business itself is making profit and is not losing money, they want you to pay yourself a W-2, meaning that you have to put yourself on payroll and be responsible for payroll taxes for yourself. For example, I am an LLC taxed as an S corp, and I had to put myself on payroll, meaning I had to sign up with a payroll company. I use Gusto as a payroll company because I've heard good things about them. I'm trying them out. So far, so good. But I have to run payroll every 2 weeks here in California because California mandates that we pay ourselves either weekly, bi-weekly, or bi-monthly, right? I don't even have an option of paying myself monthly, quarterly, annually, nothing. I have to pay myself on a 2-week schedule. So it is one of them things that has to be done. However, I will say this, if as business is going on and you are spending more money on expenses than you're making profit, then that right there, like if they ever ask, we can't argue that in the tax courts, like, the business wasn't profitable enough to make a payroll, but you would really have to keep detailed records to argue that point. So it is possible to not pay yourself the legal requirement of a reasonable wage, right? But just be prepared that if it ever comes to the tax court, you would have to show by reasonable cause that, okay, it didn't make enough profit that year to actually pay myself W-2 wages. So when it comes to LLCs and S corps, is very tricky. And when we talk about reasonable wage, it's not an equal number across the board. What they do is they look at every industry, they look at every position. Say, for example, like myself, as a tax preparer, a person who prepares taxes, well, they'll look at, okay, what does somebody with your skill level, with your knowledge, what does the average person make in this industry that's similar to what you're doing? Well, let's say that person on average makes 75,000. Well, the IRS is going to assume that I should be making 75,000. And then if I pay myself less than that, then they're going to make some adjustments on my tax return to reflect that. And I could be like, if I didn't pay myself that, they can go ahead and hit me with payroll penalties, even though it's me, which is weird, which is, again, one of them things that I don't think the public is aware of when it comes to LLCs and S corps. So I say don't do it unless you're really ready to do it. But it's amazing the things that we can get in trouble for when we are just sole owners of LLCs, tax, and S corps. So yes, we do have to pay ourselves, but if you can't, which is, obviously a general, a good reason, right? The company is making profit, can't pay ourselves. Well, we couldn't do it. Just be prepared to go ahead and prove that point. Okay. So let's see. Hope that answered the question. Yes, yes, yes. Let's see here. Somebody says, I have a seller's permit and I pay sales tax on some inventory that's sold and was taxed again. Do I receive that initial sales tax back? So let's see here. You have a seller's permit, and I'm referring to Lola here. Says she has a seller's permit, pays sales tax on some of the inventory. So I'm assuming you paid sales tax when you purchased it. Okay. And then when you sold it, you charged the consumer tax. Okay. Do you receive that initial sales tax back? So if you paid sales tax when you purchased it, the sales tax you paid, you get to write off. The sales tax you collected from the consumer, I will still say you'd have to remit to the actual taxing jurisdictions. So let's say when you purchased it, you paid, they'll just give a round number, $10 of sales tax, right? That's yours. You get to write that off because you paid that out of pocket. But then when you sold it, you charge the consumer $10 tax. Well, that extra $10 that you charge a consumer should be reported as the sales tax received, and that should be remitted to the taxing jurisdiction. If I understood that question correctly, again, Lola, that was to your question about having a sales permit but paid sales tax on some of the inventory. But so if you have a sales permit, the goal is to, all honesty, try not to pay sales tax on anything that you purchase because it will cause some confusion. But like here in California, it does happen often. So when you go to pay your sales tax, they do give you the option to subtract the amount of sales tax that you already paid. So depending on the taxing jurisdiction, they may have that option, but if not, make sure that you keep it very detailed records for your own purposes. So in case somebody tries to come back and be like, hey, you didn't pay that taxes, you owe us money. You be like, no. Here's my detail. When I purchased it, I paid tax. Therefore, I don't owe you no tax because I didn't collect tax. You see what I'm saying? So make sure you keep detailed track of all of those transactions and itemize out every single transaction. You want to itemize saying the shirt was this amount, the sales tax was this amount. So that way it's clearly separated, clearly identified as to what it is, and you should be good to go from there. Okay. Mr. Mack said, what if the business hasn't made any money? Well, if the business, and you know what? Great question, Mac. I appreciate you asking that because here's the deal. And I know, I'm not saying that y'all do this because we family, I know my family don't do this, but there's a lot of people out there that don't file taxes because the business didn't make any money. But guess what? Not making money is from a tax standpoint, we're not talking economically, but from a tax standpoint, not making any money is good. Why is that? Let me explain. There's something called a net operating loss, okay? Which means that if your income falls below this threshold and it's a negative number, that negative number gets to carry over to future tax returns. So, Mr. Mack, let's say, for example, in your business hasn't made any money, which is I think the reason probably let's just say you didn't file, it's to your benefit. $10,000 can be carried forward up to 20 years. So, for example, if you haven't filed in 3 years and every year the business didn't make money, so every year it lost $10,000. And we did that for 3 years, we now have accumulated a $30,000 net operating loss, right? That we can carry forward into years when we actually start making a profit. So here we have 3 years of accumulated losses into net operating loss. Then in year 4, we make, let's just say we make $20,000 profit. Normally, we would have to pay tax on that $20,000, right? Because it's a profit. You pay tax on profit. But we got 3 years of net operating losses accumulated to $30,000. So in that year that we made 20,000 profit, guess what? This is going to be eaten up by that 30,000 net operating loss. So that first year we made profit, we really don't have to pay tax on nothing because we have $30,000 loss that ate up 20,000, and we still have 10,000 left to carry to the next year. So if the next year we made $20,000 profit again, guess what? We'll only pay tax on $10,000 because we still had 10,000 left over from the 30. So file your taxes if you are making losses, because that's how a lot of people don't pay taxes. People are like, oh, these big companies, they ain't paying no taxes. Yeah, because they got losses that they carrying over from years, still paying, wiping up the profit that they have in future years. That's something that we got to do, right? Because we want to play the same exact game that they playing, so we can win the same exact way that they win it. So if the business didn't make any money, still file those taxes, get that net operating loss, so you can carry it forward to the year that you make profit, and it will reduce the amount of income that you have to pay. That's hope that helps on that one there. All right, give some water. Oh man, we having fun with this, and we family, man. I'm glad y'all here. So let's see what else. Um, who else am I missing there? Okay. Let's see here. The Rickest of Ricks says, what are some basic ways to protect myself when forming a multi-partner LLC? Well, Mr. Rick, the easiest way to protect yourself when forming a multi-member LLC is insurance. One, always get insurance. But here's the thing. When you have a multi-member LLC, you're automatically classified as a partnership. And when you have a partnership, you're dealing with multiple people. So not only do you want to, and I know this is going to sound harsh, but this is one of them grim realities. When you have a partnership, not only do you want to protect yourself from the public, you want to protect yourself from your partner. And I get it, right? Obviously, your partner, that's your road dog, that's your wife, your lover, your friend, somebody you trust that you would give your life to, and they would give their life to yours. That's why they're your partner, right? But it's sad to say, when money get involved, people change. I've seen it. I've been part of it. As a tax professional who's helped partnerships, I've seen the transgression, the transformation, and it's just not good. So when you have a partnership, you have to look at things from both sides, from protecting your individual interest in the partnership and protecting yourself from the consumers on the outside who may want to bring suit. So from your individual interest, each one of the partners should consider getting insurance on themselves, okay? So if anything happens to the partner, the insurance can take over the load of the partner that's missing. If something happens, God forbid, that they're not able to function and do their job, the payment from the insurance can help ease that burden. Another thing is that you want to have a partnership agreement with the individuals who are in your partnership. And that partnership agreement should not be no fairy tale agreement. It should be one of the, I mean, darkest, not dark from that point, but you want to have that real conversation. You don't want to tiptoe around the partnership agreement. You want to know, hey, what if you get married and your wife went into the partnership? How we gonna handle that? Or if somebody get pregnant, and, you want to answer. You really want to deal with the realest of situations when you have a partnership. That is going to add protection to yourself. As far as dealing with the public, the great thing is when you are a multi-member partnership, multi-member LLC, you actually have an automatic extra layer as opposed to a single member partnership, because most courts don't want to just attack both partners if the incident was the fault of only one partner. So therefore, they issue something called charging orders, and you can look this up. And charging orders allows the plaintiff or whoever is going to come at you to necessarily not attack the assets of the LLC, but be able to get whatever it is that they're going after from the profits of the LLC. So having a multi-member LLC, it definitely has some automatic built-in protections to it, but still, outside of protecting yourself inside, still get some business insurance. I can't stress that enough. Business insurance, is probably one of the easiest things that you can get to help protect yourself. Just make sure that you understand what type of coverage you need, which means that you have to be completely honest with your insurance agent. Don't hide nothing from them. Don't skip a beat, because you want them to be able to add coverage to every single thing that could happen. Okay, and then you'll be covered and good to go. So, all right, who else here? All right. Much appreciated. I appreciate everything that everybody's saying on the comments. Good, good. We having some fun here. Let's see who else got something else. Who is this one here? Chris got wings. Okay, what kind of wings you got? We flying hot wings, man. I love me some hot wings. Send me some, Chris. Um, he said I do 3 events a year, which soon will begin to start making money on. How do I go about it in taxes since it's a side job? Well, Chris got wings. If you send me some wings, I'll tell you. I'm waiting. Let me take some water while you send me some wings. But I don't even know if he's talking about wings to eat. He could just be fly out there. I don't know. But let me answer the question. So the 3 events a year, which soon will begin to start making money. So you're doing 3 events a year. That I'm assuming as of right now isn't making any money. Okay. So when it comes to taxes, what are we doing? Again, I'm telling everybody to file, but with these 3 events, I would have to know just a little bit more information, because at 3 events, you're spending money. And I'm assuming you're spending this money with the intent that these events are going to eventually put your brand out there to your target market. They're going to recognize you as a brand that has a product or services that they need, and they're going to in turn start spending money with you, and now you have a business. If that is the intent, it is falls under what's called a Section 162 expense, and therefore can be written off on the Schedule C. However, we have to be mindful of Schedule Cs, especially new Schedule Cs. I do believe I'm speaking IRS terms, so let me be clear about this. The Schedule C is the form that's filed with your personal tax return. Who's calling me? Somebody from Arkansas. That got me all thrown off right now. Schedule C, yes, file with your personal tax return that's going to list your income and expenses for your business. And I'm assuming that is how you are operating as a sole proprietor. You don't have an entity. You didn't mention an LLC. You didn't mention any other kind of entities or corporations, things like that. So I have to assume that it is a sole proprietor, which goes on the Schedule C. So one thing we have to be mindful of, and that is the startup expenses for a business. If you don't have any income coming in, income going out, the government allows you to write off up to $5,000 of startup expenses. Even though you may have spent 50,000, you're only going to be able to write off up to $5,000 as a startup expense, especially if you don't have any money coming in. They do recognize that, okay, yes, you may not make money in that first year, but you may have expenses going out. So we will allow you to write off the startup expense. It's going to be capped at 5,000, and the remaining balance have to be amortized, meaning that it's going to be divided. I do believe it's over 18. Is 184 months? What did that come up to? Maybe like 5 years or something like that. But it's going to be divided evenly over 184 months. So those three events that you're doing, you still get to write them off, but it caps at 5,000 and it caps as a startup expense, especially if you didn't have no money coming in. So off the top, you can take that $5,000 loss and it will go against other income, which again is only to your benefit. So I would say still file them on your tax return. Okay. Let's see. Hope that helps. If that didn't answer the question, man, make sure you repost it in there, give you some clarification, and I can do my best to try to answer it again. So let's see here. Here we got one. Let's see. For Kimberly Collins says, if your bank doesn't offer business accounts, can you use a regular checking account for business purposes? And Ms. Collins, the answer is yes. Okay. I do encourage everybody to get separate business bank accounts, but if, like I said, if your bank doesn't offer it, it doesn't. The thing about keeping business and personal separate, it doesn't matter the label that's on the account, whether it's business or it's personal. What matters is the fact that it was kept separate. Okay, so you can open up a second checking account under your name, under your social, with your information, and only use that account for business. It will count as your business bank account. So it having the actual title business bank account doesn't really matter. I mean, it looks good when you pull your card out and it has your business name on it. You like, hey, you already got my shiny new business card. Looks good, but you know, outside of that, it has no other purpose, right? Unless you're just gonna be the one that go to dinner and be like, I got this. Let me pay this for my business card. That's really the only benefit you get from having a business checking account. Outside of that, for long-term purposes, business checking accounts, depending on what bank you're with, if you have a business checking account, they may offer you certain type of business loans or business rates and things like that. But it's pretty much a marketing game here. It's the same as a personal loan. They just call it business. So there's no real need to have a separate business account unless you're really going to go after some of those business loans, business credit card, business things like that. But in the beginning, as long as you keep it separate and you can literally say that you was disciplined enough to not separate, I mean, or not commingle the personal and the business, it doesn't matter. Get a separate checking account. You can even open up a separate savings account. And as long as every transaction goes through that account, that's business wise, both income and expenses, you're good. No need to have anything really labeled as a business. So you're good to go. Let's see here. How would someone like Marcus structure his multiple business? So now I got to go back and look at Marcus's question. Uh, I'm assuming let me find Marcus's question. I don't know. I'm about to maybe put a pause on that one because I forgot what Marcus's business was. Scroll it down here. Let's see here. Sorry about that one. Let's see. Jeffrey says, "What if you didn't file after a net operating loss? Let's say 2017 and 2018. Can you go back and file and still use those losses 2019 and 2020? The answer is absolutely yes, you can, right? So when it comes to back filing taxes, you have 3 years from the due date. And we are in 2019. So if we going back 3 years, I do believe 20, we can do 19, 18, 17, right? Because with April, well, now that they've extended the deadline, but I think there's only for current year. So I do believe the deadline for 2017 is going to be April 15, 2020. Because and again, I'm speculating because this is changes are happening as of right now every day. So I am going to say, just to be safe, the last the last day to file and get credit for anything 2017 is going to be April 15, 2020. Okay. So if you think that you're going to benefit from a net operating loss in 2017 and 18, you best get it done before April 15th, 2020. And once those are done, they're going to have to be mailed in. Okay. So give yourself time to do that. Prior years, I do believe we still may be able to electronically file 2018. Depends on the software you're using. But 2017 definitely is going to have to be mailed in. So if you think you do so, get that done now. Get it mailed in so we can be received by that deadline so you can get credit and then carry that information forward into 2019 and 2020. So again, if you think you're going to benefit from the net operating loss, make sure that you get that in before April 15th, 2020. Okay. Um, let's see here. What else we got? Oh man, Rick is Risk. I appreciate that. I appreciate all the love. Yes, sir. Yes, sir. I tell you, we're gonna try to have fun tonight, man. Get as many things answered as possible. I'm just here because I know this COVID-19 got us losing our mind. I promise you. Me and my wife, well, not just me and my wife, but since we are quarantined in the house, right? We decided just to watch a bunch of those old movies, man. So what were we watching last night? We was watching Outbreak. We watched one night, which is man, if y'all ever watch these movies like Outbreak, the things that they do in movies, it has some very realistic comparisons to what's happening in real life right now. I was like, wow, right? Last night we ended up watching Containment or something that had oh man, it had a bunch of great actors in it, and it just kind of showed how the virus was spreading around the people. Then after that, we ended up watching another scary movie. I think it was oh my goodness, the lady went into the building and the rabies had broke out real bad, and she was uh, uh, oh my goodness, I'm terrible at trying to explain these movies. My goodness, what did we watch? So I know we watched Outbreak. Uh, Contagious, I think was the one with Lawrence Fishburne. I can't think of the name. He was in there. And then the other one we watched, the lady was following some firefighters, and they went into this building, and the lady was foaming at the mouth. I forgot what it was. We were just scaring ourselves to death, like watching all these breakout pandemic movies and stuff. We were just killing ourselves with it. But I know we was tripping now. Y'all out there tripping now, but don't worry about it. This too will blow over. So let's see here. Let me see if I can answer some more questions here. Scroll up here. Let's see. Lazy Kid says, I have a small footwear shop and business is not good nowadays. Yes, yes. Should I start my own website or sell my products on Amazon? Well, Lazy Kid, um, I don't know why you call yourself lazy, man, because to have a small footwear shop, man, that's a very good thing to do, man. I don't know, lazy people can't get out there and have a footwear shop. But what I would say for anybody who has a brick and mortar business, it's imperative that you have an online presence as well. Bottom line, hands down, if you have any type of business, it is best to have an online presence as well. I mean, I am sure that the online think about what's happening right now, right? We are forced to stay in our house. We're forced to be socially distancing ourselves. Here in California, they put the mandate in that all non-essential stores must be shut down. Everything has to go online. So I'm thinking that when we recover from this, a lot of people is going to kind of be used to doing things online. So it's best to have a presence online, because even with people who one of the conversations I was involved in is like, well, what's going to happen to the employers who have now sent everybody home to work, and people that's at home working like, man, I can get used to this. I ain't got to get up no more. I'm just going to sit here in my chair, type away, do some things. They're not going to want to go back to work. And they probably going to make it so they don't have to come back into a building. So a lot of things is going to go online. So yes, Mr. Lazy Kid, I am going to highly encourage you to get a website. If you have apparel, put stuff on Amazon. I mean, Amazon, right? You want to put your brand in front of people, right? Yes, they may come by and see your small little footwear shop, but having that online presence, having something tangible to ship to people on Amazon can only help your business out. Yes, it would be an additional administrative duty. You got to find the website, you got to get everything on Amazon. But in my opinion, it is going to be well worth it to get your online presence out there. And as you're doing your online presence, make sure you understand your keyword research, make sure you understand search engine optimization, make sure you understand your target audience. So when you're putting your ads out there, it'll be easy to build those ads to let people know that, hey, I'm now online, here I am. It'd be easier to let people know that once you have that information. So as you're doing that research, make sure you get your keywords, make sure you stick to your branding. That means your fonts, that means your words. Make sure that your keyword that you're known for is in your URL. Make sure that even on Amazon, those same things is on there. Make sure you understand the language of your target market, and then you, my good friend, should be good to go. Okay. Um, so let's see here. Let's see here. I'm trying to catch up on here. So Lola says, what are the rules for writing out inventory expenses when you are starting a new year? What is the benefit of donating all old inventory instead of keeping it? So when it comes to inventory, that's a rather seriously involved question. We probably have to have that conversation offline, because it depends on whether you use first in, first out, last in, last out, or last in, first out. I mean, it's so many rules when it comes to inventory. But in general, um, really, when it comes to inventory, is understanding what was the cost of it. Now, you would use that cost to bring that over into the new year, like the cost of goods sold, because that's when we talk about inventory. That's what we're talking about, the cost of goods sold, or COGS, as we call it. Just being able to know what the final number is, your ending inventory should be the same as your beginning inventory. If you decide to give all of that to charity, you can write it off as a charitable expense up to a certain amount though. Okay. Usually when you give gifts, it's only $25 per gift. So if you're giving out inventory that's worth more than that, you might want to reconsider that, because they're only going to give you $25 per gift as a credit. Okay. But again, when it comes to inventory, send me an email on a separate note so we can get in there, because that one goes a little bit deeper than what we need to, or sort of what we can discuss here. Um, let's see what else here, man. We've been on almost an hour. It didn't even feel like it. 54 minutes. So I'm gonna give us about maybe 6 more minutes here. Go through as many questions as I can. I guess is what they call the lightning round for the last 6 minutes. Let's see here. Um, just say the word LLC says, with this craziness, you're revoking the S corp and keeping the LLC and still file sole proprietorship. My CPA said it's okay, but I'm to the point where that you don't trust the CPA. Man, that one right there. Just say the word LLC is very interesting. I would kind of know why you wouldn't want to trust your CPA. So assuming that you have an S corp already, um, video after they had already formed their LLC and was like, well, I already got it. Now what? my question is, yes, I made the video why you don't need it. But if you already have it, how can we make the best of it? How can we get the best use possible out of what we already had? If you already have an S corp, one thing that the S corp does, especially if we compare from a sole proprietor to an S corp, the greatest benefit of an S corp is the savings on self-employment tax. Okay, and again, that's a little difficult to explain without being able to share my screen and things like that. But one of the greatest benefits of having an S corp versus a single member LLC is the possibility, and I say the possibility because it's not always true, depending, but there is a great possibility that you can save money on self-employment taxes. And if you have an S corp already, I don't know why you would want to revoke the status, especially well, if you're not seeing the benefit, because there is a point where having an S corp can actually cost you more than it would save you. So if you're at that point, I understand, okay, why you would want to revoke that status. But keep in mind, or is it something that just happened one time? Did it cost you more than it saved you one time? And if we look at future year projections, is it going to, maybe it didn't save you money this year, but next year would have saved you money? You know, the year after would have saved you money? Start looking at those projections. Y'all know my favorite hashtag is run me those numbers. Because when you run those numbers, we get to see again, yeah, it may not cost, it may not save you money this year, but then you revoke the status, and now the IRS says you revoked it, so we ain't gonna let you have it for the next year or two. And that's the year when you really need it because that's the year when you can really save money. Then you won't do so. So I understand that you're not trusting your CPA, and I have to laugh at that. But give them a second chance. Maybe tell them to run those numbers for you to see. Yeah, it may not cost you, or may not be cost beneficial this year, but what about the next year or the year after, and things like that. So before you revoke the S status, run those numbers for the next couple of years. Do your projections. Hopefully, you've written a business plan, and we can look at the business plan and be like, okay, this is what we're projecting. Is it going to benefit based on these projections, right? And also keep in mind the climate of business right now. A lot of things are happening with COVID-19. We got to kind of go back and repivot a little bit. We ain't gonna panic because remember, as hustlers, as entrepreneurs, as bosses, we don't panic. We pivot, right? That's exactly what we do. We're gonna go back, take a look at these things, and be like, okay, I need to adjust for these changes, and here's my new projections. And based on those new projections, is this going to be beneficial for me? And if you can say yes, I would hold off on revoking S corp status because S corp status is rather fun. You can do a lot. You can change the color of money when you have an S corp. That's as much as possible on so like I said, revoking the S corp status. And if you really need to, again, I'm out there. Make sure you reach out to your favorite uncle, cousin. That's what I do. I prepare taxes. That little, what is it? Let me see if I can see that. What is that certificate right there? Is my enrolled agent certificate. I don't really advertise the fact that I'm an enrolled agent because to me, and this is just my own personal opinion, it's like a marketing thing. Like, oh, you're an enrolled agent, you're elite. But you know what? I knew the same information I knew before I was an enrolled agent. So to me, it's the information, is not the certificate, right? But I understand some people like to see that because it helps them trust more. And your uncle cousin had it, so you can trust me if you need to. Just saying. All right. Let's see, a couple more here. Oh, we are at the 59 minutes, but whatever. We quarantine. We can keep going if we need to. Um, let's see. My man Eddie, I see you, man. Yeah, shout out to Mr. Eddie out there. I appreciate you waiting on him to build. Look, this man is building a game truck from the ground up. I can't wait to see the finished product. That is going to be an amazing journey. And maybe have him on here to kind of tell us a story about how it came to be. Such a touching story, such a great story to hear. So let's see here. Linda Allen says, how do you send in wage proof if you don't have a W-2? Okay, got a letter 12C sent in 1099 miscellaneous info. Where you go, Linda? I'll say that if most time when you get letters from the IRS and they want you to send in proof of income, one, what tax year? This is what I would do. I would verify what tax year that they're asking for, okay, and then look on that tax year's tax return. Because sometimes, it could have been a mistake, not a mistake. Maybe they put the 1099 income as W-2 income. Simple mistake, could have happened. If that did, that's probably why the IRS is asking for verification, because they didn't get record that you had a W-2. They only had record of a 1099. So start there, look at the tax return of the year in question, see if there was a interest on line 7 that should have been on line 12. And if so, I would write back to them explaining that and then send in the 1099 as proof. Okay. Let's see what else here. Let's see who else got going on. All right. Well, good. I look like I do believe I think we just pretty much hit the end of all the comments. Man, that was a good session. I enjoyed that. We did an hour exactly. So to all my people that tuned in, grateful that you watched. Thank you. For those of you who may be watching this later, thank you for watching. And again, this will probably be the first of many Freestyle Fridays, I may call it. We'll come back in next Friday, do this again. And if you haven't subscribed, make sure you subscribe to the channel, because I will be doing my best to keep us updated, providing as many resources, answering as many questions as I possibly can during this unprecedented time. Stay safe and stay healthy. Of anything that I want you to do those 3. I repeat, stay home, stay safe, and stay healthy. That's exactly what I want you to do. I'm going to go ahead and end this broadcast, man. Again, I appreciate everybody who joined me tonight. Much love to y'all. Hit me up. You know how to reach me. You can hit me up at UCTG, which stands for your Uncle Cousin Tyrone Gregory, at theselfemployedtaxguy.com. You can leave comments below. Y'all know my track record. I do my best to respond to every single comment. And until then, man, y'all stay safe, stay home, stay healthy. Know that I love you, and I will talk to you later.